Monday, February 8th, 2021, Maneco 64, home of alternative economics and contrarian views. Billy's not here this morning. He's all right. Just didn't feel like waking him up. He looked very comfortable. So UK silver premiums for Britannia's, which is the equivalent of the 1 ounce gold eagles in the US, are going for as high as 100% premium, and that's from one of the biggest online bullion dealers in the UK. We're going to look at that. Before that, let's quickly look at where the markets are. It's 8:23 a.m. London. We've just seen, before I started here, gold drop like $5. This is the time around which the bankers start to come into their office, if they're coming into the office, but it's when the markets start really picking up in Europe. Yes, they do start a little earlier, but right now, yes, gold is at 1812.70, down $1.40. The high's been 1819, the low 1808.25. Spot silver is at 2706, up 16 cents. It has been as high as 2733. So it's up 2/3%. The Dow futures up 78, S&P is up 10, and the Nasdaq 100 futures up 66. The currencies, sterling is down 0.1%. So is the euro. The dollar's up 1/8 versus the yen, and the dollar's down slightly versus the Chinese currency or the yuan. High-grade copper is up 0.25%. Crude oil is up 1%, getting almost near that 60 level. That's, of course, WTI crude. Brent crude is just below 60. So, yes, the commodity sector is continuing to go up. Before I go into the premiums for silver, let's have a look at a few charts here that I've got for you. The first one is the gold-silver ratio. I spoke about that over a week ago, about 10 days ago, when silver was just starting to make a move that it did last weekend. I think it was on the Friday before that I spoke about that we had to break that 70 or 69 level in the gold-silver ratio. Yeah, really 70. And it did, of course, as you can see here, it dropped very sharply, and then it picked back up when silver was smashed down, the silver price, by the bullion banks. And then now you can see here it looks like it's tumbling back down, and that's a positive, not just for silver, but for the whole precious metals complex, for gold as well. We have seen historically that in a precious metals bull market, that ratio drops. Where it will go eventually when this is all said and done, I don't know, but I have a feeling we could approach that 15-20 level. So the other one I wanted to show you, which is looking very interesting, and I've been looking at this chart for over a month, maybe a couple of months now, the Commodities Index, the CRB, Commodity Research Bureau Index. This index has been published since 1957. It's made up of all the major commodities, gold and silver included, crude oil. And as you can see here, in the beginning of the century, this commodity index started to break out at around really 2004, end of 2003. Gold and silver had already started moving higher. They bottomed 01, 02, but it was only when all commodities joined in that gold and silver really picked up. And you can see that we topped in 2008 in the CRB index. So did gold and silver. And what's that purple line? Well, that's the 200-week moving average. You can see that in the bull market earlier this century, yes, we need to stay above that 200-week moving average. And then ever since 2008, yes, the market did pick back up, general commodities, in 2011, but it failed to make an all-time high So it's been in a bear market for like 12 years at least. And that blue line has been really difficult to get back above. We got back above it in 2011, 2012. But as you see now, it's starting to break out. And there's a lot of room. Bond yields are starting to move up. And what do I think is going to happen with the bond yields? Well, I think the Federal Reserve is going to be hard pressed. They're going to have to increase their QE in order to keep those down. Because if they allow it to go up, it's going to make their zero interest rate policy look ridiculous. They've said that they're going to keep their rates near zero for another 3 years. So yes, the 10-year yield is testing a key level here at 120. I think we are at 119 this morning, up about 2 basis points. I think we need to keep an eye on 130. The 30-year bond yield, the long bond, is actually breaking through 2% right here. We're just above 2%, hasn't really accelerated. That's a key level too. I think it could hurt the stock market if we see bond yields continue to go up. How long the Fed's going to wait to make some kind of announcement, I don't know. So that's very interesting. Also, the bond yields and commodities are starting to show that the inflation that's been created for many decades, and by inflation I don't mean the CPI, I mean the amount of money and credit the Federal Reserve has allowed to be created. That's going to seep into real things, into commodities, into precious metals. As you can see by this chart from Incrementum, their report from last year, In Gold We Trust, look at how commodities at the time were undervalued in relative terms to paper assets, and they still are greatly undervalued. So I think even if bond yields go up a little bit, and if they drop, and if they tinker with the CPI and keep it around 2%, people are going to wake up to the fact that the cost of living is increasing. We're going to see food prices increasing, the actual real things. The Fed's going to have a tough time. They're really going to have to start increasing that QE amount and buying bonds. And that's going to be more and more positive for the precious metals and commodities. So they're between a rock and a hard place, the Federal Reserve. So back to the premiums here in the UK. I was surprised. This company here, Bullion by Post, they're one of the biggest online dealers in the UK, if not the biggest. I, of course, work closely with gold investments. People started asking me a few years ago, where can I get gold? Because the objective of my channel is not to sell things, but they wanted to know. So I know the guys at Gold Investments really well. I've been dealing with the Temples since 2002 with their father. Now they're in charge, Oliver and Simon. And I have a promo code with them, Monaco64. Right now they still have silver. I'm not sure about the Britannias. They're still waiting for it. You can pre-order. But if they have the silver and you buy it from them, they'll ship it and you get it next day or the day after at the latest. They'll ship overseas as well. But Bullion by Post. You see, UK's #1 online bullion dealer. And I was shocked to see this. Their price is £40. Usually they have different prices for different amounts, but it looks like any amount here they're charging £40. So usually let's say if you buy 100, the price would have been maybe 32. The spot price for silver in the UK is around 20. So that's 100% premium. And then you got the VAT as well. Does it put me off buying silver because of the VAT? No. I'll tell you a personal story. Back in 2003 when I bought my first silver coins the price was £3.20, and with the VAT it was around 360 or thereabouts. And I was concerned at the time, but am I concerned now when the price is like 20? No. So this is a sign that demand for silver is getting really ramped up from the investment side, from the side of retail. I've heard that's the great thing with the channel. It's growing, and I get a lot of information. A lot of my information I get from my viewers. On the live stream last night, people were telling me, oh, so-and-so can't get 1,000-ounce bars. 1,000-ounce bars are very important, because with 1,000-ounce bars, we're starting to get into the wholesale, to the big boys. So if those are running out as well, that's not a very good sign. What about the other dealers? Well, Atkinson's, their premiums are not as high. As you can see here, his price is $32 with the VAT. But if you look here, dispatch may take up to 14 days. So my feeling is they don't have those coins really, and you're gonna have to wait a long time. Another big online dealer, and also you can go, it's a coin shop as well, ATS Bullion. Look at their silver, all out of stock, all of it. Even the non-Britannia coins, it's amazing. We just need to try to keep stacking if possible. It's getting harder and harder. And when will the paper price have to really, how can I say, try to match the real physical price? Well, I think it's when they start to have problems sourcing the 1,000-ounce bars. Also, if we start seeing a lot of demand for delivery on COMEX. So there you go. I think we need to be patient. The bankers, the bullion banks, yes, the central banks, we're fighting a strong force, but I think we're more numerous than they are, and we just need to try to be clever. We need to keep a hold of our silver stack, our gold stack, and try to add on to it physically. As I've said, SLV, all ETFs, I wouldn't recommend them. You're playing right into their hands. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. You can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.